Major support for these programs is provided by Bank of America, Merrill Lynch, and Perfect Building Maintenance, New York Community Bank, All Nation Renovation, Kilroy Architectural Windows, New York's Window Company, Greenberg Traurig, LLP, M&T Bank. Additional support is provided by AVR Realty Company, LLC, Ackman Ziff Real Estate Group, LLC, Bingham McCutcheon, LLP, Briarwood Organization, Capital One Bank, C.B. Richard Ellis, James Orphanides, Centurion Holdings, Cushman & Wakefield, Dimes Savings Bank of Williamsburg, Douglaston Development, DDG Partners, Eastern Consolidated, Hal Fettner, Durst Fettner Residential, Friedman, LLP, Accountants and Advisors, Gemini Real Estate Advisors, LLC, Genova, Burns and Gian Tomasi, Grubb and Ellis, Investors Savings Bank, Jack Jaffa and Associates Real Estate Consultants, James D. Kuhn Real Estate Institute at Syracuse University, Madison Realty Capital, Massey Knackle Realty Services, Meridian Capital Group, Margolin Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Newmark Knight Frank, RAL Development Services, The Spandrel Group, LLC, Siami Development, SJP Properties, Site Comply, Sterling and Sterling, Stephen Napolitano, The Wickoff Group, Urban American.
You know, America is a place where people go shopping. They love going shopping. They go to these retailers. They go to Whole Foods. They go to the Gap, DSW. They go all over. So today I've assembled, right after the ICSC event in Las Vegas, all four people who are a little tired because they all came back from Vegas, to provide their insight on what's happening in retail, specifically a little bit in Long Island and the region, and then we have the national perspective. My guests today include Mike Papagallo, who is the Executive Vice President and Chief Operating Officer of Kimco, John Gutlieber, who is the President and CEO of Castagna Realty, Charles Hirsch, who's the president and CEO of Millbrook Properties, and last but not least, David Blumenfeld, who's a principal at Blumenfeld Development. So you're urban. You have urban retail on 116th Street. You have 125th Street. You have the Arches. You even have Staten Island. I don't know what they do in Staten Island. Only Josh Musk tells me, you can find some good stores. What's happening in retail today? How is 2011 in the retail world?
Well, I think you're seeing consumers slowly starting to spend more, which is a good sign. You're seeing activity from the retailers where we didn't see any activity in the last 2 years. Certainly people are going to the centers more. I mean, what we're seeing out in Deer Park is we've seen a 30% increase in traffic. We haven't seen a 30% increase in sales, but I think it's the comfort zone. You're going, you're shopping, you're willing to look where you weren't willing to even go and look before, and tease yourself whether you were going to purchase something or not. Now you're seeing it start to happen. So we're at the beginning of hopefully a new cycle. I don't think it's going to be an exponentially shooting up growth. I think it's going to be very slow and steady.
What about the fact that gasoline is up close to $1 from last year? I mean, do you see that having an effect on the retailers?
No, I don't see it having an effect on the retailers. I mean, I think that you still want to leave the house. You still want to go out and, as David said, go shopping. Not sit at home. Although, if we're talking about Long Island, it's affected a lot differently than the rest of the country is probably.
I mean, there was an article in the Wall Street Journal or the Post, I believe, saying that the cost of doing a barbecue this season compared to last season was like a 46% increase with propane, with food, with everything. So I mean, it depends on your customer. I mean, John, you have the premier customers at the Americana. So
Well,
how
I'm
do you-
actually more worried about my Father's Day barbecue now that you mentioned it. But yes, we thankfully have the best retailers.
But so
What do
that,
we see?
it's like a tale of two cities on different retail. Even though the economy has been hurt, luxury retail for certain things are doing better, right?
Well, I think everybody expected luxury retail to really be down for quite some time. Now, if everything you read, the world ended and it was going to take forever to get back. But luxury retail did come back a lot faster than anybody expected, including ourselves. But to David's point, with retailers now are talking to people, even the luxury retailers, when that cycle hit, you could be talking to yourself because nobody would take that leap. They didn't know themselves, and they didn't know what was going to happen and so forth. But the luxury market, has come back and well.
Michael, you as I called you prior to the show, the 800-pound gorilla, because you're the publicly traded real estate investment trust. You have how many shopping centers in America? I'm not
In the
talking.
U.S., just over 900.
You have 900 shopping centers. How do you see it nationally, regionally? The retail effect on Kimco. I mean, the stock has done great and great management, but how do you see the retail?
Well, I guess from an economic point of view, clearly the recovery has been somewhat uneven. It's been very market specific, and some of the areas which, at least in the Kimco portfolio, where you have a preponderance of small shops, particularly the mom and pops, not so much the national small retailers, they've continued to suffer. And that's been a consistent trend. What is different, though, is many of the national players, those national retailers, just by example, people like Bed Bath & Beyond or TJ Maxx, Ross stores, and some of the supermarket chains have continued to grow aggressively. And the primary reason is that their development is basically shut down throughout most parts of the country. So the supply-demand balance is starting to change. And as these retailers have come off from a couple of good years, their balance sheets are strong. Wall Street wants them to grow. So they're looking for space.
Now,
and
Wall
that's
Street,
increased demand.
okay, Wall Street wants them to grow, but this is a two-edged question. Are you building new shopping centers in this environment, or are you just keeping what you have?
Pretty much keeping what we have. Where development comes in, it would be more euphemistically called redevelopment or add-on development, just increasing density in a given location, or if we can gain an adjacent piece of land, maybe to build an out parcel or two. That's generally what we've been working with our retailers with. But in terms of greenfield development, we feel that on a national level is still 2-3+ years away at best.
Well, I remember a cute story a number of years ago. I have some good friends in Cleveland, and I was taken out to a lifestyle center. This lifestyle center, which in reality you could call Americana Mall and Wheatley Mall a lifestyle center, but they were different. We were joking with the Rainforest Cafe. They hopefully they had an Apple store so you could at least walk in. They had some other places. Do you see that happening? The lifestyle.
Lifestyle? I don't believe you're going to see a lot of lifestyle development. I mean, truthfully, specifically lifestyle is entertainment, shopping, retail, office, residential. Yeah. I don't
think you're going to see that. But
well, Jerry Walkoff's planning on building one.
But in your Tanger situation, in Deerfield, in Deer Park, you happen to have. You don't have the residential component, but you have entertainment. You have movies.
We have movies. We have lifestyle and health club. We have full retail, outlet retail, and we have office space. So we have a lot of it. And honestly, we should have built residential there. I think their residential would have done very well. Rental, low income, moderate income, not low income, or low income for Long Island, maybe not low income for the rest of the country. And it would have been a great place for people to live.
What about, I don't want to age myself, but I remember there was something called malls. There was shopping centers. What's happening to the malls of the world?
I would suggest that there's been an even further bifurcation between the higher quality mall and the lesser quality malls. What we've been surprised about is how well the malls have rebounded and how quickly they've rebounded, even relative to shopping centers. And particularly in the public arena, you've got some of the very strong players who are doing quite well. So it really comes down to that A mall, that Roosevelt Field type mall, continues to go gangbusters as Americans start to concentrate their shopping and becomes much more experiential. Whereas those malls that are out on the periphery in the lesser markets, they're suffering, and there's a real question as to will they ever survive. Remember, there's been basically a handful of malls built each year over the last 10 years, and probably virtually none these days. So it's a supply, again, another supply-demand issue.
I think this exactly, malls will be doing exactly what you were saying before. If they know it's a good property, they'll expand there or retrofit it because they already know the market. They know,
So who's coming in? Who's coming to the Americana, Wheatley, other properties? Who's coming to the Millbrooks? Who are those new tenants? Who are the new kids on the block? And who are the new kids on the block that you'll take a risk on, that you'll put in as a tenant, perhaps?
Well, there's not that many new kids.
Right.
But
That's
Some of the old
issue.
people
It's not-
expanding,
Yeah, it's old people renewing,
Yeah, exactly.
remodeling, but I don't think there's a lot of new.
but maybe new to whatever that center is, but not necessarily a new.
And what about the health club? You bring up the health clubs. Equinox, I still remember a great story when Danny started it. He was a multifamily guy. He was up on the Upper West Side. He had one or two little brown, 5 stories, and he opened up on 69th Street, and now they just took over gyms. So they're taking over Variety.
Well, Equinox just bought Soul Cycle, so
Right.
they're getting into the spinning business. But we brought to Long Island Lifetime Fitness, which is the country club of health clubs, let's call it. It's a 165,000-foot health club, indoor, outdoor pools, spas,
165.
1,000 feet.
Yeah. Have you seen it?
No.
Yeah.
It's incredible.
Very
It's-
attractive.
It's the kids all go there after school. Kids are allowed to be part members. It's family membership, $200 or $250 a month for the entire family. 3 indoor pools, 1 outdoor pool, full basketball courts, rock climbing walls, and it's basically daycare for the kids. Kids go there after school, hang out. Country club, families go there on the weekends. The parents work out, the kids work out in the kids' gym. It's an incredible place.
They have
And
racquetball?
They do in most of their clubs. They couldn't afford it on Long Island. You can't make money with the land costs and the building costs building a racquetball court.
Do you have any?
When you asked the question, I joked to myself. I recently talked to my regional teams, and I said, "You've been giving me so many gym deals lately that I think we may convert ourselves into a health club REIT." Because it is one of the areas, probably the most prolific number of new sources of tenants that we found over the past
But is that
year.
the Planet Fitness as opposed to?
Retro
Cuts
Fitness.
across the board. It could be the very high-end type clubs, the Equinox type clubs, or what we're seeing a lot of also are the basic bare bones.
Right, the $49 a month,
Even
or
less.
the $19
even
a
less.
month situation.
Some cases,
Retro
if it's
gym.
really
Right.
small, no lockers, no showers.
Right.
Just a
Right,
basic.
like the curves or the
Right.
the situation.
So they cut across the board, and it's probably, again, one of the most active users that we've seen in many of our centers. And for us, it's assuming you can deal with the parking. The other co-tenants can deal with the parking in the right times. It's been a great way for us to absorb space that's been vacant for quite a period of time. There's always a question of dollars and cents on how much you need to give the gym operators to make it happen.
Parking's an issue because the car stays there. And if somebody goes to the gym, they always park closest to that. They never want to walk
Say if
anywhere.
they're exercising, I'm tired. I slept
I
already.
don't want to
enough
walk.
of
I don't
this.
want to walk from here to there, but I'm going to spend 2 hours in the gym.
Here, so the world, as I said to you prior to the show about banking, the money's back. The financing is back for real estate, isn't it? Have you gone out recently to refinance, any of you?
I mean, we're out to refinance, and if you're refinancing an established entity that has sales and customers and tenants are doing well, I think it's a different world than if you say, I'm going to go build something. I don't know that the banking is all there to go
But
build
they're
something.
still looking for, a lower loan to value. They're not giving money away. They still want the established property. They still want, to make sure that they're covered.
They want to do business with
A former banker, come
They
on.
want to do business with the people they want to do business with, and that's the deal. And if they don't want to if they don't want to do that other kind of business, they're not going to get the money. So I think they right now have an opportunity. The regional banks can go after the better client, supply their needs, be flexible to those needs. But again, it's not a high loan to value. It's the appraisal is a little bit lower, all that type of thing. So it fits that criteria. But so it's aggressive on the relationship side as opposed to underwriting side.
It's interesting. About 2 years ago, I had Prudential on the panel. I had 4 insurance companies, and we were talking about Cross County Mall, and they had financed it at a pricing of like 7.5 a year and a half ago. And then we did a show later on, and they said, that deal today would be 5.25. And probably today it might even be less. How are you seeing it? Because you have the capital access of the public markets, of raising funds from the bond market.
Right. And we use both. We have a pretty large institutional management joint venture program where most of the assets are financed with non-recourse, generally CMBS debt. And to your point, it's been a reinvigoration of that entire market. Again, most of the properties are bread and butter, down the fairway sort of assets, not a lot of story to it. So we are getting very good quotes and getting deals refinanced without issue. Similarly, on the public side, the corporate balance sheet on an unsecured basis, that market has also gone on fire. The best analogy I could use is in the bond market at the depths of the recession, most of the traders were using credit default swaps as the mechanism to price bonds. And they were generally for Kimco at the time, concerns about credit, they were 1,000 over. Now the credit default swap for Kimco is probably about 120 over. So that's giving you a perspective of the change in mindset, even in the unsecured market. So the capital is there, and I think the concern for any acquisitive company like Kimco is again, too much capital chasing too few product and maybe creating maybe an inappropriate level of cap rate considering the fundamentals.
But that's bringing up another question. Are you seeing people coming to you and saying, I want to buy your centers? I mean, there's a lot of investors on the sidelines who are looking at certain assets. I mean, urban retail we know is highly regarded. It's the Arcadias of the people, people who have this. I know that I happened to meet with an Israeli insurance company. I mean, one of them is big as a partner.
Big shopping centers.
Big shopping center. Yes. Okay, there are foreign investors. They like this type of thing. Have you been approached? I mean, what's the access for capital?
Just at ICSC, Big approached us that they love to buy some more properties or buy into them even in a joint venture. Just get themselves, into more and more, either Long Island or New York real estate.
They love New York. They love Long Island, and yeah, we do get approached often to sell properties.
But is it a tale of a couple of cities? I mean, Mike really has a great perspective because he's a national. Are we living in a special place over here? That
I think we are, and I think in New York area and even suburban New York, with the right location, there's people looking for that type of if it's if they see it really as another investment, but in a special category, and they really see a very little risk. But it's New York, it's Washington D.C. and retail. It could be on the West Coast as well. But other than that, it's not. There's other people chasing different things, but real assets are the better.
I mean, Charles, you have Jersey, don't you, in Maryland?
Yeah.
And how's the Jersey market?
Yeah, and it depends on the shopping center. We have one shopping center that's 600,000 some odd square feet, and we get calls all day long about buying it. And you're not a seller on that, but you don't get calls on the 100,000 square foot center necessarily, and then off market.
How hard is it to develop? I mean, it only took you
15 years.
15 years, but finally came out. It's great.
Thank you.
I mean, East River Plaza really. Manhattan needed East River Plaza, and people were complaining. I still remember, you're paying for parking. It was something. It was a different world. But you still get those complaints
About the parking?
Yeah.
Yeah, I mean, there's always somebody, but people are getting used to it. I think it's a learned. You've brought or invented something new that didn't exist. I mean, everybody sort of jumped on it, and they built Bronx Terminal Market after it and Rego Park after it, and you know, it's now become a more of a norm thing. But still, it's a learned way of shopping, to drive to a Costco in Manhattan or a Target in Manhattan and park and pay $4 and.
But
And they argue that they'd rather drive over the bridge, but because they're used to paying the toll to go over the bridge and come back. They're not used to paying for the parking.
Mm-hmm.
But how is an East River Plaza doing? I mean, the Costco, you got Costco, you got Target, you got Best Buy, you got Marshalls. I mean, you have
Every store is either at plan or above plan. So they're all doing well. And I think it's growing every month, every week. Sales continue to grow in all of the stores. We had a local retailer that's a street retailer that we had on the second floor next to Target. He's moved out. We have 4 or 5 tenants looking at that space that are national because they're used to operating in that environment. I don't think the street retailer was.
You know, you brought that up before, which is interesting. The street retailers who are in downtown Brooklyn, or the street retailers on 125th Street in Harlem, they operate in that street retailing. But it's different and you're not a mall. You're a vertical mall.
I'm a stacked urban center is what I am.
Right.
A suburban center that's stacked in, So what I think is you go to a typical street retailer and there's so many goods. You could barely walk around a store, get past the aisles. And that's not the national chain. I mean, the national chain is a very scientific method of where a product is placed and how it's placed and who's going to buy it based on where it's placed. And if you have someone going to Costco and Target and Best Buy and Marshalls and Old Navy, they're not going to walk into the store that's overly crowded with goods that you're not comfortable walking into. And I think that's just why they didn't do well.
I think I brought this up at one of the symposiums I moderated recently. I was saying to some people, and I think everyone here, Charles is the youngest probably, but who I happened to be at your wedding, ironically. But there was something called Sam Goody's. There were record stores. There were, cassettes.
The internet killed a lot of that. I mean,
Thank you, and that was something that Charles, John brought up before. What's happening with the bookstores? I mean, you have Borders. You had Borders. I mean, the board. Okay, no, Borders and the Barnes and Nobles and so on. I mean, that was an attraction for a retail center. Did you have any of these?
We had no bookstores. Luckily we had none.
Charles?
didn't have any.
We had Rizzoli one time at Americana.
Right, but that was a specialty bookstore.
And we had a record store at Wheatley Plaza. But that was before the big internet. But it was a category. It was something for a local shopping center.
But do we have that potential problem? And I think you brought it up before, like with Williams Sonoma, that if you don't have to try it on,
Right.
is that going to have an effect on your retail environment?
Yeah, I guess the way I look at the answer, the short answer is of course yes. And there's a lot of discussion and debate going on with the national retailers about how to incorporate e-commerce as a complement, as something to get more share of wallet from a customer as opposed to being a binary situation. There are certain concepts like music, like bookstores that are going to be the basic business case is dramatically affected. There are other things like apparel, or electronics that could potentially be integrated and that you could, in effect, both use e-commerce opportunities as well as in-store opportunities to increase the sales platform.
We're negotiating, I can't mention right now, but it's somebody that has e-commerce, but they're now opening up stores. So it's the reverse.
Now here's an interesting thing. It's not the e-commerce. At one time, aging ourselves, there were Herman's, there were all these sporting goods stores. And that was not records in the world, but people still buy their sneakers, they still buy their gym.
Yeah, but there's still have Dick's and Modell's and
There's still
Sports
up.
Authority?
I have an interest.
But they're not like they used to be. You
Well, no, they
remember?
became more apparel stores.
When I was Frank Castagna's banker, he was negotiating with Herman's or whatever it was, and I said, "Yeah, it's great," and he said, "No, I'm not going to take them." I said, "Why not?" He said, "Well, the father and son comes on Saturday. What happens the rest of the week? And he's right on. It's exactly. It looks like you're filling up a lot of space, but nothing's helping each other out on the mix of different tenants.
See, I think in the sporting goods, it's going to go back to the smaller store.
Yeah,
I would think. That you can go get your baseball glove because you do want to try it on, and you want to try on your pads or your tennis racket.
Right, but so you don't need the 10,000.
No.
I mean, in Xanadu, they were supposed to open up a Cabela's. What is it?
Cabela's.
Cabela's.
That's different.
150,000. That's
different.
That's like your lifestyle center.
Outdoor sports.
That's different. That's a cult.
Right.
Has a cult-like following to it. Fishing.
Like Bass Pro and
Yeah.
Cabela's.
Are we going to see bowling returning? I mean, in Manhattan.
Yeah, I think you have too.
I think you have.
They're high-end bowling places
Yeah,
that are.
bowl-
You make an evening of it now.
Bowlmore.
Somebody's
No,
bowling cool.
no, that's in Manhattan. Have we seen that in?
Yeah, Brooklyn Bowl.
Yeah, seriously, yeah.
Have
Yeah,
you seen
Strike
it?
on Long Island.
From Melville, right?
Yeah.
How about
It's
you?
about density. To the shopping centers and products we're talking about in the New York metro, clearly yes. Outer suburbia, not as much.
What about the Trader Joe's and the Aldi's, which we were talking about before?
They continue to infiltrate, and and I can't think of anyone who doesn't want a Trader Joe's in their shopping center in terms of sales volume. But it's those sort of specialty, retail specialty food providers that increasingly trying to find a niche, and operators and panache becomes more important. In supermarket business has always been a tough business, and it's getting tougher with Super Walmart, Super Targets, dollar stores, pharmacies, warehouse clubs. Everybody's selling food.
Dollar stores are doing great, aren't they?
They're doing tremendous. The Dollar Trees of the world looking to grow by 200-300 stores a year. They're
Family
very
Dollar
flexible.
also?
They're
Family-
very
Five
flexible.
Below.
Five.
It's just one after the other. So when you've got this conversion of product offerings, on one hand, it's a good thing because it just increases demand for space. On the other hand, any landlord trying to negotiate tenancies and trying to deal with use clauses and restrictions on food, it can be like playing 3 levels of chess before you can get the right tenancy and tenant mix in.
I think I need you to all come back for the 11th season, which starts in September, because you can't talk about retail and get a good perspective in 30 minutes. So I'd like to thank all of you and hope you will return. Mike Papagallo, John Gottlieb, Charles Hirsch, and David Blumenfeld. See you next week.
Major support for these programs is provided by Bank of America, Merrill Lynch, and Perfect Building Maintenance, New York Community Bank, All Nation Renovation, Kilroy Architectural Windows, New York's Window Company, Greenberg Traurig, LLP, M&T Bank. Additional support is provided by AVR Realty Company, LLC, Ackman Ziff Real Estate Group, LLC, Bingham McCutcheon, LLP, Briarwood Organization, Capital One Bank, C.B. Richard Ellis, James Orphanides, Centurion Holdings, Cushman & Wakefield, Dimes Savings Bank of Williamsburg, Douglaston Development, DDG Partners, Eastern Consolidated, Hal Fettner, Durst Fettner Residential, Friedman, LLP, Accountants and Advisors, Gemini Real Estate Advisors, LLC, Genova, Burns and Giantomasi, Grubb and Ellis, Investors Savings Bank, Jack Jaffa and Associates Real Estate Consultants, James D. Kuhn Real Estate Institute at Syracuse University, Madison Realty Capital, Massey Knackle Realty Services, Meridian Capital Group, Margolin Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Newmark Knight Frank, RAL Development Services, The Spandrel Group, LLC, Siami Development, SJP Properties, Site Comply, Sterling and Sterling, Stephen Napolitano, The Wickoff Group, Urban American.